We're back on Morning Trade Live. Let's focus on Nvidia. The company's earnings report on Wednesday and is likely to be the biggest market catalyst on the schedule next week. Analysts are expecting adjusted EPS of $1.24 on revenue of nearly $55 billion for the third quarter. Shares are up more than 35% this year, but have pulled back to start November. We are up in trade today just by about 0.25%, so that is the focus of the morning trade. Joining us now for a closer look at this name is Schwab Network's host, Marley Kayden. Very good morning to you, Marley. Happy Friday. So Nvidia is going to be one of the biggest catalysts, no doubt, for the market next week when it reports earnings. And you and I will be there breaking down the numbers. But ahead of that, we've seen some price target boosts. Talk us through what the analysts are saying here.
Yeah, and the analysts are still very bullish. Despite that pullback you mentioned, we have seen Nvidia under some pressure of late, but we are seeing some really bullish calls here from the analyst community. So Wells Fargo raising their price target today up to 265 from 220. Right now they're trading at 187.21. They're keeping that overweight rating on shares as well. They're saying that they see the third quarter and fourth quarter of 26 both guiding upside. They think that they'll come in better than expected. They're also increasing their estimates. Those increased estimates are the reason for the price target change. They also think that there will be a consistent 2027 30 times PE multiple, given Nvidia's strong growth and what they call its best-in-class positioning for continued data center and AI investments. And no argument there. I think pretty much across the board, everyone acknowledges Nvidia is the leader. Morgan Stanley also raising their price target. They're up to 220 from 210, keeping an overweight rating. The firm says that their industry checks are showing that material acceleration and the strongest results that they've seen in the last few quarters in terms of its Blackwell ramp up. So they're raising their estimates above Street View and says that they still believe that they're conservative despite raising them above Street View. They said that Blackwell remains the AI chip of choice and that Vera Rubin demand signals are very strong. And they also believe that Nvidia shares have underperformed their AI peers, but that should reverse. And that's not the first time that we've heard that sentiment echoed here on the network. And then our last one is Oppenheimer. This came in yesterday. Now, they raised their price target up to $265 from $225. They also maintain their outperform rating ahead of results. They see that same upside consensus to Q3 sales. They're expecting EPS of $1.25 on revenue of $54.7 billion. Q4, they're expecting that to rise to $61.5 billion, EPS of $1.42. They're saying that's led by the GB300 Ultra. They're also saying that these hyperscalers continue to upside their capex, reflecting insatiable AI appetite. They're viewing that as a positive, not as an AI bubble signal. And adding that their backlog is growing. So a lot of really strong fundamentals here, a lot of potential growth drivers cited in these reports. And it is important to note, even though Nvidia has pulled back recently, they're still up more than 35% this year. And in the last four of their price has doubled in 4 of the last 5 years. So, I mean, just exponential growth when you're looking at their chart, which, like you mentioned, comes to the point that if there's any miss at all here or anything super positive, we are going to see the market move along with Nvidia no matter which direction it goes.
Yeah, and there's a really interesting Wall Street Journal piece out this morning talking about how obviously Nvidia has really wanted access to the Chinese market, but then you've got now Amazon and Microsoft going, hold on a second, not so fast, which is a bit of a sort of rare divergence we're seeing between what are two big Nvidia customers. But even with this and sans China, the analysts remain bullish. So I suppose that's going to be an interesting theme playing out as well. Thank you so much for that, Marley. I'll catch you a bit later on. Let's trade it now with Dan Deming, managing partner at KKM Financial. How are you approaching your example trade for this big one, the Super Bowl of earnings, as they like to call it, come next week?
Yeah. Hey, Sam. I think that you're seeing the selling pressure that's creating an opportunity here for some potential move back towards the recent highs. So I think that, looking at the way the implied vols are structured going into this announcement next Wednesday, it does create an opportunity to position for an upside move and do it in a way to lower the exposure from the get-go by buying a call 1 by 2. I'm looking at the December call 1 by 2, the 185 200 call 1 by 2. And that you can do that for actually a small credit here, and it gives you a capture range higher than where we were trading in the end of October. So the break-even is 215 on this to the upside. So it gives you a range to capture to the upside here if we see some higher price action in the stock, particularly after earnings. Now, this is one way to capture that. Now, we do have some risk above 215, then you start to lose money on this trade, but there's still a pretty big capture zone to get us back towards those highs and even above those highs before this becomes a problem trade on the upside.
Well, I mean, tech bull Dan Ives did say that perhaps this tech sell-off would be a buying opportunity. We're already seeing, I suppose, some dip buying this morning. We're off the lows.
Yeah.
We're seeing companies like Nvidia, as you mentioned, Microsoft, also Apple, just fractionally higher today. We've had some nice numbers for Apple as far as China sales are concerned. What do you make of the action we're seeing out here for this Friday?
Yeah, it's very different than the last couple of days, Sam. And what I mean by that, you pointed out, you are seeing some dip buying going on, like the other couple of sessions where we saw the selling pressure really accentuate as we moved through the session, and some of those high flyers really getting sold where the defensive names were being bought. That is not necessarily the case today. We're seeing, the selling pressure early in the morning. Now we're seeing some buying pressure, and you're seeing those stocks that have been beaten down the last 3 days finding some higher price action while the defensive stocks are being sold. So a different dynamic today. It'll be interesting to see if we're able to get back to unchanged by the end of the day.
Okay, we'll be watching. We've got 67.20 now on the SPX. Thanks so much for that, Dan Deming, as always. Have a great weekend. Managing Partner, KKM Financial. Speak to you next time.